mythological.
Yeah, no, it's real.
A narwhal?
Yeah.
Like a horned seal, basically.
It's like a unicorn, but in the water.
Isn't that
like a
crazy
manatee
that
with a
really
horn?
exists? I mean, why is it so crazy to think that a unicorn could exist? I guess
Who said it didn't? They just haven't found one yet.
Yeah, that's true. A narwhal exists.
Yeah.
I don't know why I thought it was mythological. It's got that very straight unicorn-like horn coming out of its head. Are we already recording? This is good. This is good. This is good material.
Yeah, this is. We're gonna eat this up.
Oh, you want to play paper, rock, scissors to set the mood? Now, I think some people do paper, rock, scissors, and they shoot on the third fist pump.
Shoot?
You know, so rock, paper, scissors, shoot is when you choose your weapon.
That's an extra.
You do it on the third?
Yeah.
Huh.
Like bam, bam, bam.
All right, let's do that. That's going to throw me off, though. All right, ready?
Do you do dynamite? Is that one that you use?
No, I didn't know you could do dynamite.
My wife hates the dynamite.
Suddenly, this is turning into
because if you have scissors, you can cut the fuse off the dynamite, but dynamite blows everything else out.
That's interesting. I've got to explore that.
I may have made that up.
Paper, rock, scissors, though. Ready on three. Okay. 1, 2, 3. Oh, 1, 2, 3. You know why? Because we both went to the same middle school and the same high school. They educated us
genetically
the same way. We're just going to continue to tie. Let's not continue.
Okay.
All right. My fellow alumnus, Steve Jackson, president of SouthTrust Bank in Texas. Thank you for being here today.
My pleasure.
If you were advising a business owner buying their first commercial property today, what would you want them to know?
I think the most important thing today is to get an accurate handle on what your total operating costs are going to be, because the monthly principal and interest is only a small part of the overall total cost. Particularly over the past several years, the property taxes and insurance have gotten so much more expensive that whether it's on the residential side or the commercial side, people thought they had a fixed rate loan, so their payments weren't going to change until they realized that principal and interest is only part of that payment, and that as insurance rates have continued to go up, and especially on the commercial side, since you don't have any homestead exemptions, the property taxes have gotten onerous in some cases, and so people have perhaps bought more than they planned on once those annual expenses start creeping up.
If interest rates stay higher for longer, what does that mean for the future of commercial real estate?
Well, in the long scheme of things, as long as I've been around, interest rates really aren't high. They're high compared to what was an extremely low, artificially low, depressed interest rate environment during COVID. But compared to the past 50 years, interest rates are really at a fairly reasonable level. Now, with the other costs having increased over time, activity would obviously still be better were rates lower, but if that doesn't happen, then that just gets factored into what the underlying value of those properties is, because you can't, the more that you're having to pay to borrow money to purchase a property, you're still going to, the owner, investor, developer is still going to require a reasonable return on their investment, so it's just going to reduce the amount that they're willing to pay for various kinds of properties.
How have higher interest rates changed the way that borrowers behave, maybe in ways that people wouldn't expect?
One of the things that we have seen over the past couple of years is that while there has been a disconnect between the borrowing rates that people are getting in the debt market and the cap rates that people are paying for commercial investment properties. It used to be that somebody could come in, buy a shopping center, apartment project, or some other kind of income-producing property, put 20 or 25% cash down, finance 70, 75% of the purchase price over some reasonable period of time, and the property would generate adequate cash flow to service the debt. That doesn't really happen anymore. Most of the transactions that we see are requiring 30 to 35% down, 40% down in order for the property to cash flow adequately, because the cap rates are lower, and so people are having to pay more to service, to get the having to put more money down in order to get the cash flow to a level where a bank's comfortable proceeding.
Are there any commercial loans that look good on paper now, but actually scare commercial lenders the most?
Well, different lenders have different appetites. So what scares me might not scare somebody at brand X bank down the street. It all depends probably upon your personal experience and what you've had problems with or success in the past. And I've been doing this long enough to where I have developed a certain affinity for types of projects and lack of comfort with others. And yet there are, as one example, our bank does very few motel, hotel loans. It's a fairly large debt market, and yet it's one that we just don't have any expertise in. We don't have the industry knowledge. We don't have people in the business that can help advise us on that, so we just avoid it. There are banks that's the majority of what they do. And it really kind of depends upon what you're comfortable with. You need to find a lender that kind of fits with whatever the type of property, type of project that you get comfortable with.
Yeah. Is your outlook for the future of commercial real estate in Houston positive? And how does it compare to your outlook for the market in Texas or nationally?
I think it's positive. It is frankly less positive than it has been at some points in the past. The secret to a strong commercial real estate market, and frankly the same thing with the residential market, is population growth of a certain market. And whereas Houston and Texas have both been very strong population markets for a long time, particularly in the past year, that has changed dramatically. If you look at Houston, Harris County by itself, our population growth over the past several years has been really due to net in-migration of new international residents from outside the country. We have net out-migration of people that live here and they move to other states. So it's critical for Houston to continue to have that inward flow of international residents. And frankly, with the political climate the past year, that has slowed to a trickle. And Houston, compared to most other markets in Texas, is growing much more slowly. And so everything cycles, and I think that will come back at some point. But for the near term, I think it's certainly creates a bit of question over kind of what the near term potential for the Houston market is.
What was that signal?
Just try to paper rock scissors to see if I can untie one hand.
All right, let's try it. Ready?
Go figure.
One more time. Oh, I lost.